We have a special guest who can really help us focus in on some of these issues that are in the news from the New Media Monday perspective. Elijah, welcome.
Good morning.
So let's start with the basics. I mean, this is New Media Monday, and for a lot of the front page family, we're really just dealing with the, sort of entry-level cyber life, right? Just breaking into social media, breaking into some of the amazing things that we have access to through apps and new technology and hardware. So explain the very, I know you teach 101, but I think we might have to go to pre-101 here. And explain what the whole cryptocurrency concept is. Most have heard of Bitcoin, but I don't know that people can go much further than that, and perhaps we should define that as well.
That would be great. Thank you, Dominique, for sharing this space and for having held this space for the community and for the world for so long. It's really a blessing that you've been sharing with us, and thank you for having me to be a part of this. Cryptocurrencies, or Bitcoin, which was the first cryptocurrency, are the currency of blockchains. And when I first heard about Bitcoin, I didn't really think anything of it. I didn't understand the value of it. As you mentioned, I was more familiar with gold and recognizing the real tangible value of gold. There were a lot of things that I really appreciated about gold, but in the cryptocurrency world, in the blockchain world, which is the technology behind cryptocurrencies, it's really a new technology that's transforming how we transact. Money is basically utilized for transactions, and I believe that transactions are really to help facilitate higher qualities of life. That's why we transact. And cryptocurrencies, blockchain have emerged to transform transactions so that we don't necessarily need a middle person like a bank, which often, kind of as the song spoke to, allows for concentration of power and usury, taking advantage of the situation. So blockchain, in a lot of ways, replaces the function of banks. It allows people to transact very efficiently, very affordably, and allows for a lot of the principles of the movement, transparency, accountability, to exist in transactions. Blockchain is basically decentralized processing of data. And so what we had in the past, or what we have to some great extent in, let's say, the banking situation, is centralized computing. The banks basically determine what the truth is, how much is in your bank account, what transactions have occurred. Blockchain is basically exactly that. It's a chain of blocks of data. And the data is processed decentrally on thousands of computers around the world. And so it really decentralizes the power. It decentralizes the whole transactional experience. And so, it's just really transforming how transacting occurs. And it's amazing. There's a real renaissance occurring in this kind of sphere of money, which is really transforming and really supporting a lot of the transformation that's occurring in the world today.
I think it is hard for people to get their minds around because it's not something you can hold in your hand. And even though most of us don't hold our bank balance in our hands, we're really swiping a card and it's going away, and a lot of us have direct deposit, and money comes back. And most of the time, you don't actually hold paper money in your hand. But the whole blockchain phenomena seems very abstract. So how is it controlled, and how do you feel secure and trust that it even exists, right? We heard early on with the whole Bitcoin conversation, a lot of people losing a lot of money.
So I think that has to do with kind of trends and waves and things in different asset classes. And so that would be like a similar experience to, let's say, real estate. When real estate was fairly low in price tag in the 90s or back in the 80s, people weren't really paying as much maybe attention to it or mind to it. And then as it started getting really hot, as the wave was going up, a lot of people started jumping into real estate. And I remember back in 2007, 2008, basically everybody was becoming a real estate agent and broker, and everybody was saying, real estate's the greatest investment in the world. And that was basically when it was peaking out before it fell down, and a lot of people lost money then as well. And so I think it's really important to understand where we're at in different trends, so that we can basically be in when buy low and ride it up or sell high. And so that's one perspective that I think is very important. And what I really love about the cryptocurrency world, the blockchain world, is that there is a structural cycle, a 4-year cycle that occurs that helps, if you're aware of it, that really helps people to be able to position themselves and to really benefit from the trend rather than buying at the top and following it down. So I think that's a very important piece to be aware of when considering cryptocurrencies and blockchains. And there is a kind of renaissance occurring, and so we may see even some transformations in that trending as well.
So, so much to unpack here. I mean, what you're saying is that it's just like any other investment, that there's a way to do it: buy low, sell high, or buy low and hold on, or whatever your desire is. But that it's just another thing to invest in. It's not any more risky, say, than any other stock or any other kind of investment.
Well, I'm not saying that it's like any other investment because of the nature of what it is. It really is a new technology. It really does embody some different values, some very transformative values and principles. And so I think it very much does lend itself to this kind of decentralized and community effort and transformation. So that, I think, is part of its nature. And so we do see a real significant growth in what's considered decentralized finance, or DeFi. And it's, in a way, very, a democratizing or community effort, and a lot of, creativity and transformation occurring there. So I actually believe that it is probably the single best investment or asset class out there. And it's not just a belief that I have, but there's a lot to indicate this. First, for the last decade, cryptocurrencies have outperformed every asset class out there, from real estate to stocks, tech stocks, silver, gold, oil, everything. They have handily outperformed everything. And second, the World Bank has projected that this will continue, that for the next decade, for this decade, cryptocurrencies, blockchain will continue to be the biggest growing asset class, and that it will grow from where it currently is now, around $1 trillion market cap, to about 10% of, more than 10% of global GDP by the end of this decade. So as an investor, that really tells me this is the place to be. This is the arena for us to really be looking at the solid growth developments for us to be investing in or to utilize or find service from. So there's a lot of different ways that I see that people can benefit from this renaissance that's occurring in the blockchain and cryptocurrency world.
Okay, so one of the things that I noticed you write about, and which I did find some, indication of that in my research, which is not vast, I admit, is that this is something that many traditional financial institutions are pushing back on or undermining. Yes.
There have been, especially recently, a number of what seem to be baseless attacks. At the same time that we see it opening up space for different establishment, special interests to move into the sector and kind of create their own space or brand. So it's very interesting. We see both mass adoption and recognition. So for several years now, different U.S. agencies have recognized it as virtual currencies. And then at the same time, we see, like the SEC recently filed a lawsuit, probably the most historic lawsuit in current times, against Ripple, which is the third largest blockchain and cryptocurrency by market cap. And it's very interesting because despite that, Ripple repeatedly attempted to engage and seek guidance from the SEC for moving forward. The SEC, even though one of the former commissioners of the SEC wrote to the current or the chair of the SEC when this lawsuit was filed, said that there is no pressing, compelling, immediate enforcement action need, and he recognized that it was very unfair for them to be singling out Ripple versus other cryptocurrencies and just a number of problematic aspects. And I think that Ripple's response, they just filed their response to the lawsuit recently, stating that, one, the SEC lacks proper authority to regulate XRP, that no regulators in the rest of the world claim that XRP is a security. The U.S. government has repeatedly classified XRP as a convertible virtual currency. XRP is exempt from the Securities Act because it's the functional equivalent of currency in that it acts as a medium of exchange and a unit of account. There's a number of, aspects to cryptocurrency that it's a new technology. It's a new thing. And so it seems to me that the regulators are having some difficulty figuring out how to interact with it. And because it's opening up a realm that the U.S. government to some great extent has controlled. They've dominated the money supply. That this is actually really shifting power and wealth in a lot of different ways. And so I think the powers that be, the establishment, is definitely attempting to figure out how they can utilize it for their purposes versus the kind of decentralized community development that it has been.
XRP is blockchain?
XRP is a cryptocurrency and Ripple is the blockchain. So to explain it a little bit more, the relationship of the two, as I was mentioning, blockchain is a chain of blocks of data that has been decentrally processed. And so when someone there's all these thousands of computers all over the world that are processing this data. And when they process the data, the blockchain pays them in the currency of that blockchain. So let's take Bitcoin, for example. There's a Bitcoin blockchain, and when people process that data, or what they call mining, they get paid in that Bitcoin. And so at first, there were no exchanges. People were being paid in that Bitcoin, but they really had no way to utilize it. And so there's really been this evolution of the infrastructure all the way to the point where back in the beginning of July, the bank regulators actually recognized that U.S. banks can now hold cryptocurrencies for their customers. So there's been a real evolution, and we've seen PayPal and Visa, et cetera, adopt blockchain or cryptocurrency since then, and the infrastructure has evolved so that even more people can utilize them.
So, It sounds like this is becoming, I mean, even Elon Musk said that we're very close to a point where cryptocurrency will go mainstream, where it's considered completely mainstream. But it sounds like in the interim, what's happening is that the, big financial establishments are moving to sort of shut out the regular little person and kind of make this an elite, I guess, a playground or arena, if you will.
Definitely, I see different tendencies. There's that kind of traditional tendency that we see in the United States, both the political and economic system, where it benefits a small or elite group, and we definitely see those same kind of tendencies and structuring occurring in certain ways. There's also what I was mentioning, the DeFi movement, and a number of other different movements and aspects that are making blockchain very available for people. And so we're seeing that this decentralized finance movement is really developing, and how can I say, creating a real viable alternative that people are really adopting. And so what we were talking about a little bit earlier about blockchain replacing bank function. So kind of how things work now is we have to basically utilize banks in terms of mediating our experience with money. And what blockchain does is it actually allows for people to transact and interact without that middle person. And so, like right now, just to give one example, right now, banks pay maybe 0.05% when you deposit your money with them. So they give you basically nothing for allowing them to utilize your money. And then they turn around and they're lending it to other people for 5, 7, 10, 30%. So they're making a huge return on the money that you're giving to them and giving you almost nothing for it. So in the decentralized finance world, there's a lot of different ways that it's expanding and developing. But one of the things is that you can actually deposit your money, and they're paying 8 to 12% is pretty much the industry standard at this point. And so there's a lot more respect, in my opinion, in terms of how these decentralized platforms are allowing people to interact, that you can deposit your money for a much higher return, and the people who are borrowing it can borrow at a much better rate than what we experience when the banks are mediating for us. So there's a lot of different ways that it's developing.
It's Radio Free 102.3 KJLH, Compton, Los Angeles, Long Beach, and Inglewood. We're talking with longtime investor and advisor Elijah Carter. And, I have to ask you, well, first of all, I want you to, if you would, just define how you see, what's your definition of the DeFi movement and who is involved in that?
So the DeFi movement is the Decentralized Finance movement. And one of the things that I kind of look at is kind of Bitcoin as the kind of baseline, or it's also like the poster child or the proxy for the cryptocurrency world. Well, in the DeFi movement, there's not just in the DeFi, but in the cryptocurrency world, there's over 9,000 different cryptocurrencies. We're seeing a real explosion of blockchains and cryptocurrencies. And they're addressing a lot of different needs and providing a lot of different functionality and services. The decentralized finance movement has been outperforming. We're seeing huge growth occurring there. So where we saw Bitcoin being kind of like the baseline last year, 300% growth, and which is pretty normal in these kind of cyclical trends, and he speaks even much greater potential if we look at previous cycles. The DeFi movement has been outperforming that. The DeFi movement, we're seeing 500, 600% return last year in some of the leaders. And so what the DeFi movement does is a lot of the different functionalities that we see that kind of traditional banks or market makers have done, but they're replacing it and doing it in a way that is more community developed and oriented. So for example, exchanges in the stock world, you have to basically have a broker that goes to these exchanges, a private broker like Schwab or TD Ameritrade, etc., to purchase and exchange stocks for you, to buy and sell stocks for you. In the decentralized world, there's an exchange that basically it's a nonprofit. It's a community development where the transacting is occurring, where the trading and swapping is occurring, and it's not owned by a single centralized power. It's basically owned by the community, and it's one of the largest developments out there. It's facilitating the trades on the level that private exchanges, the market cap that private exchanges have. And it's phenomenal. My experience of it, I'm a big fan of it at this point. Uniswap. I did a couple of small transactions on it back in August and September, and as a benefit or how can I say, an acknowledgement of being an early adopter of it, they ended up giving 400 Uni, the cryptocurrency of that blockchain, to everyone that had utilized that exchange to that point. And at this point, that 400 Uni is worth about $4,000.
Wow.
So it's been amazing, the kind of benefits and sharing that has been occurring in the decentralized finance movement.
There's always something to be said for being an early adapter, if you know what you're doing. But okay, so I still have a bunch of questions to ask you here, but first of all, how is this control? I mean, who is regulating it, right? I mean, this is really kind of a new frontier, and it's a global phenomena. So who's in charge? Who's regulating?
So, yes, that there is, how can I say, a lot of different movements within the establishment and legislatures to adopt policies and regulations for cryptocurrencies. And the cryptocurrencies, as far as I can tell, have been very open to that conversation, have been going to these different seats of power and speaking with them and interacting with them. Some of the things that the legislatures and regulators are asking of them are not things that they can actually do because of the way that the software is structured. So how can I say it? Let me give an example that kind of speaks to it. Blockchain is kind of run decentrally, and so there's a browser that runs. So I can browse the internet through this browser that's run on blockchain. And because it's run decentrally, the websites that usually place cookies and collect data on me are unable to collect that data on me. And so what the regulators want to do is make sure that these blockchains are providing certain data on users, and some of these platforms are basically developed in such a way that they can't provide that data. And so we're seeing...
So it's kind of like the whole point is that there is no one control. Like, that's like the whole point, is that there is no authority in a sense, right?
Yes, exactly. In a lot, it's how can I say, it's creation. It's a creative development. But it's really effort. Like this. It's almost like really the software is allowing people to kind of interact with each other directly without a middleman. So it's not one software. There were, how can I say, the cryptocurrency and crypto technology, the blockchain technology evolved out of certain values, concepts, principles, and has been evolving in a lot of different ways. And so the software, a lot of the software is open source, meaning it's readily available for people to access and utilize. And people are taking it and duplicating it and changing it and transforming it and utilizing it in different ways. And so there's a real, yes, the software is opening it up for people to use it in a lot of different ways. And we see somewhat like you've been speaking to, that there are certain kind of establishments and regulators that are attempting to utilize it for their interests and in the way that they would like to utilize it. And then there are other kind of movements or efforts and developments that are taking it in all these other different wonderful directions.
Okay. Well, I think, you've given us sort of a basic overview. I think a lot of people still feel like this is just some, I don't know, kind of out there concept that is not tangible or real, that isn't safe or isn't even, I don't know quite how to say it, isn't even really a thing, you know what I mean? That's tangible, that it's kind of a, like a pie in the sky concept.
It's very tangible. There are a lot of people that utilize it to live on it. There are a lot of people who are... To live on it,
like all their financial transactions are cryptocurrency.
They're being paid in it. They're being paid in cryptocurrency. They're utilizing it, the cryptocurrency infrastructure, such as wallets, which are similar to bank accounts, but instead of bank accounts, they're getting paid in cryptocurrencies. There are businesses in Japan that are utilizing it for payroll. There are people who are definitely earning and receiving returns that are replacing incomes. They're able to live the life. They're able to purchase real estate, able to travel, able to live with it. You can connect it to your bank account. There are a lot of ways to make it very tangible and very useful.